I'd like to welcome everybody to this amazing session tonight. I call it amazing because of what we are going to be discussing today. And those discussions are not just mere informations. They are what I call calibrations to prepare us for the big things that will happen to us individually and corporately. I have a strong belief that when people are not ready for greatness, greatness does not come. And so I want to thank the Akilaah leadership for creating this forum for members and partners to get exposed to trending issues and realities that bother around finances, financial intelligence, business, and lifestyle, as the case might be. I'd like to say a big thank you to the Akilaah workforce for working to make today real. It's a few minutes past 8 o'clock, and it's as our tradition, we ensure we work with time. And I just scrolled through and I saw that our speaker is already in the house. Can we please put our hands together for him? Just put an icon of clap, and thank you for being around already. And without wasting much time, with the permission of the leadership of Akilaah, we declare this wonderful webinar open, and I'm going to start by giving us insights. I didn't see the hand clap for our speaker. Hello? Our speaker is already in the house. Okay. All right. And so I'll quickly, in the next few seconds, let us know who our speaker is. I think his profile has been displayed on the screen. I don't know how the leadership does it. They bring seasoned people to speak with us. And as you see right there, this is somebody that's been in the banking sector for years, precisely a decade. And his experience in that sector, combined with his current portfolio in the tax area, is a big plus for us today. And he has been certified a tax expert. And ladies and gentlemen, let me give you a background to our topic, financial reset. We are in a very sensitive period in Nigeria right now, where only people that are informed will have an edge. I say it again, only people that are informed will have an edge, because there is a lot of financial evolution going on, monetary policy evolution going on. And some of them are new, and a lot of them are confusing. Yes, permit me to say that way, because even the government players themselves have not gotten the rhythm of what it takes, or the narratives. It is not clear because there are counter positions and different points here. And I want to bring to your notice that today's session is going to help us have perspective. Get ready with your question. What happens to your business? What are the tax activities around you? There's been a lot of calculations, permutations, some untrue, some not true, some in between truth and true and falsehood. Ladies and gentlemen, at this point, I'd like to welcome our speaker. By the look of his name, he is from the food baskets of Nigeria, and I think I can pronounce his name very well. Teide Hembe. Ladies and gentlemen, without wasting much time, because we're going to be asking questions and there's other information we're going to be relaying to you, having to do with the plans for the year, the big plans for the year, and updates, and many things you can plug into. I'm privileged to be your anchor person. Ibrahim David is my name, and thank you for this privilege. Ladies and gentlemen, at this point, I really want to see the clap icons going on. Let's welcome Mr. Teide Hembe, our speaker for today. Can we please celebrate him as I hand over the invisible mic to him? Thank you very much, sir. Welcome, everybody.
Thank you very much, and a very good evening to everybody. I believe we can see my voice.
Clearly.
Oh, very good. Very good. Okay, you pronounce my name so well.
Thank
Sure,
you.
missed it.
Madam Akilaah will understand that, so I won't say anything for now.
That's good. That's good. Okay.
So,
So appreciate. Okay, there are 22 of us here. That's quite a good number. And unfortunately, it's an online meet, and it's just a 1 hour interaction. And I understand I have just somewhere under 30 minutes to do this presentation and then allow for questions. I'm sure even that 30 minutes, I'll try and make it brief so I can have ample time to make it an interactive discussion, with respect to the topic at hand and then other things around the service offerings of Akilaah. Okay, uh, overview of the Nigerian tax reforms. So you see reforms because it's not as if the country has not had tax laws by which it administers its taxes. The laws have been there. A number of statutes had been in place, to govern and give direction to the way tax and levies are administered in the country. But then this administration now thought it wise to set up a committee led by Mr. Taiwo Oyedele to take a look at the entire body of laws that relate to taxation and all kinds of levies and see how they can harmonize them with a view to making, the entire thing around taxation simpler to understand and easier to implement. So if you see that first box there in the slide we are looking at, no, still on that slide, still on the slide, you would see in bracket there a number of those repealed pieces of legislation, repealed acts. What is the first there is company income tax, which used to, you know, provide the basis for taxing income generated by companies. And then Personal Income Tax Act is not captured in there, which used to be the basis for administering taxes that had to do with income earned by individuals. So the effective date of all of this is January 1, which we've gone past, which means this new set of laws now, harmonized laws or reformed tax laws, are already in force as we speak. And the focus of all that reform was generally to try as much as possible and reduce the incidence of double or multiple taxation, encourage formalization. That means you're an informal business, you're not encouraged to go and probably register properly and become, a formal business within the formal sector and be more transparent. And then, but most importantly, to provide some succor for small businesses that before now were being stifled out of the business environment. So next slide. Next slide, please. Okay. Now, all those plenty laws have been streamlined into, four broad acts. But the most important are the first two. All are important, though. For our discussion, is the Nigerian Tax Act, which basically is the substantive tax law governing, the taxation in Nigeria, not just federal taxation in Nigeria. So it incorporates, what you need to know with respect to income earned by individuals and how it is taxed, and what you need to know with respect to income earned by companies and how that will be taxed. Next to that is the Nigerian Tax Administration Act, which sought to, provide a clearer framework for administration of tax in Nigeria. Then you now have, hither to January 1, you had the Federal Inland Revenue Service. That has been done away with and replaced now with what you call the Nigerian Revenue Service. And then It's given life, you know, by this act, Nigerian Revenue Service Establishment Act 2025. Before now, you also had the Joint Tax Board, which sought to bring some kind of harmonization between the federal, state, and local government tiers of government and the way with which they administer. One, they create tax laws and administer them. So, next slide. Next slide. Okay, so we'll delve straight into what are those changes. I termed this slide key provisions and changes, but then I thought it wise at the point we were making this submission not to bother so much about the provisions because it's very easy to become bored with such topics wherein you begin to see me quote several sections of the different harmonized acts. So we'll make it as simple as possible. We just need to focus on where you have provisions, just look for something and cover it. The focus is on what has changed really. And then if that has changed, what is the implication for cooperatives? Now we all know that from time immemorial in Nigeria, cooperative societies are generally tax exempt. But but there is a caveat. The exemption has a limit. To the extent that the cooperative limits its activities to within its members alone and does not engage in what we call commercial, widespread activity, then whatever income or profit or excess over expenditure is realized and distributed within members internally is tax exempt. What does this mean? As a member of a cooperative, if I get dividend, if I get a share of profit, taxation will not apply to that at all. I won't be charged personal income tax on such income. However, if such a cooperative, let's assume it has 10 members and then they all agree to use part of their funds now to set up a shop in Wuse Market and then procure goods and stock in that shop and sell to the general public. Then the profit they derive from such an activity will become taxable under the Nigerian Tax Act 2025. Next slide. Still on the key changes, individuals who are members of cooperatives, this is a very important point. Somebody could go here with a misconception that being a member of a cooperative, once I earn income from any source, is not taxable. No, it is only that income that accrues to you by virtue of your membership of that cooperative that will not be taxable. And such an income must also accrue from activities that generate the revenue whose excess over expenditure is distributed internally to members. Now, the key thing for us to note here is that regardless of the fact that you're a cooperative member and you enjoy those internal benefits, if you earn income from any other source other than this, then that income is taxable in your hands under the relevant sections of the Nigerian Tax Act 2025. If such an income is from employment, it is also possible that the cooperative might have employed you. So you enjoy dual status. You are both a member and an employee. Or let's assume that you are just even an employee. The salary you are paid or your emoluments are taxable. They are not tax exempt. So this needs to be clear. Next slide. Where a cooperative is engaged in commercial activity, we discussed this briefly in the previous slide. Once the cooperative goes outside of the mutual activity that generates benefits, including profits or income for members, once you go outside of that mandate, then whatever income that is generated from such a business activity, if it's a business activity that is commercial in nature, will be taxable. Let me pause here quickly and take us to somewhere that we're familiar with. If you belong to a church or you worship in a mosque, the management of that church or mosque, income so derived by way of donations and all of that offerings are not subject to all we are discussing here now. But then, where such a church or mosque sets up, for instance, a plaza, has shops in them and lets out those shops, the income derived from rents from there, even though such an investment belongs to the church or the mosque, will become subject to taxation. I needed to draw that analogy and bring it home. So for a cooperative too, even though the setup is such that it is a not-for-profit, where such a cooperative begins to engage in activities other than that core mandate, then income derived from such an activity, if it's a business activity that is commercial in nature, will be subject to tax. Now, that activity can be seen as, the cooperative as an entity now engaging in a business and can now fall under any of the categorizations of a business that is commercial in nature. It can fall under a categorization that would, you know, define it as a small business or a medium business or a large business. So you have cooperatives that are, there's a very popular one in the Netherlands that different dairy farmers had to come together several years ago and then pool resources together under one umbrella to begin to produce milk that is exported and even consumed here in Nigeria, has been consumed here in Nigeria over the years. You can find out such a cooperative exists and is still doing business. Now, that business is doing, which it even produces and exports, the revenue earns from there, after all costs resulting in profit, is taxable where that cooperative is resident or tax resident. So now if the cooperative goes out of its mandate to engage in business, then it now falls into those categories, like I said, either a small, medium, or large business. At that time, then, we can now say that the exemption thresholds as captured in the Nigerian Tax Act 2025 would apply. What are those thresholds? If you are a small business, as members of cooperatives, we could also have our own private businesses. So this is important for us to know, even beyond the cooperative. If you have a small business and that business is a limited liability company, then if that business's turnover in a year is below